participating in our webcast, KPMG Brazil and KPMG US, where we are going to discuss primary investments in Brazil, M&A, tax structuring, and value creation. My name is Ericson Amaral. I'm the head of International and M&A Tax partner here at KPMG Brazil, and I'm based in São Paulo. I have a very great team here with me. If you allow me, I will make the introductions. So we have here, besides myself, the other speakers will be Marco Andre. Marco Andre is our head of deal advisory and strategy. He's based in São Paulo, and he's the head for Brazil and South America. We have Julio. Julio is based in Rio de Janeiro. He's an international tax and M&A tax partner. Camila Bacellar. Camila is a tax director based in São Paulo, also focused on international tax and M&A. We have Gordon Warnke. Gordon is a US-based tax partner, leading the complex transactions group, and also a member of the Washington National Tax. Carlos Toro, also international tax and M&A tax partner. He's KPMG Brazil. He's now currently based in London. He's leading our European desk. And last but not least, of course, we have Marcus Vinicius. Marcus is a tax partner, M&A tax and international tax, also based in São Paulo. So it's a great team. And hopefully we are going to provide you guys with great insights and great comments. We have a couple of administrative comments before we get started. First of all, just one reminder. Please remember that we have a second webcast, which will take place on October 14th. The second webcast is quite similar, but not the same as the one that you guys will watch today. But the second webcast is very, very focused on private equities and asset managers, sovereign wealth funds, pension funds. So I encourage you to watch also the second one, which again will take place on October 14th. From the administrative perspective, if you allow me, very quickly, CPE regulations for those that wish to obtain the certificate of attendance because of CPA credits, please, you have to respond, 6 questions out of the 7 that will pop up on your screen. Of course, those that do not want to obtain the certificate do not need to answer the questions. But for those that, again, wish to obtain the certificate of attendance, please stay logged in, take part in the online questions, and you have to answer 6 of the 7 polling questions, okay? Second point, all participants will be on a listen-only mode. And of course, questions are more than welcome. And in order to do that, we have a Q&A session at the end. Use the Q&A box, which is on the right side of the WebEx transmission screen that you guys are seeing. And finally, if you have any technical issue, please use the Help tab at the top of the WebEx screen. If it doesn't work for any reason, so just please submit a question, a request for help by using the question box, okay? So without further ado, I'd like to start. In the interest of time, we are going to try to keep this, of course, within the time frame that we scheduled. I'd like to thank you again for the participants. And as the first speaker, I'd like to bring to you guys my colleague, Marco Andre. Marco Andre will talk about M&A landscape in Brazil. As I said before, he's the head of deal advisory and strategy for Brazil and South America. And again, instead of throwing a bunch of numbers and graphics at you, he's going to speak based on his experience in order to provide real insights. So Marco, I kind of request that you enlighten us as far as the Brazil M&A landscape, please.
Hi all, good afternoon. My name is Andre Almeida. As Ericson said, I lead the deal advisory and strategy practice in Brazil and South America. So, Ericson, thanks for the invitation. My objective here is just to give an overview of what's going on in terms of M&A activity in Brazil. And I'll try to focus much more on the opportunities and what our views are on what's going on here on the ground, right? The headlines don't help a lot. Most of the headlines about Brazil have been negative, in some way a bit exaggerated. Doesn't necessarily represent what's going on in terms of good opportunities and good changes that are happening in Brazil, in our view. Brazil has a very, very diversified economy. So if you see the M&A activity, the private equity investments, venture capital investments, you see that usually there is no concentration in one specific sector, but many sectors, with active transactions and active opportunities. The year is catching up in terms of quantity of deals. August was the best month so far for M&A, with more than 100 deals announced. But September also is very solid, very active. So let's see whether September will exceed or not August. But as a matter of fact, since June, the M&A activity has resumed, and it's pretty hot. We're seeing many good opportunities for investors in Brazil. Just mentioning some of the sectors that we think have been very active. One of them is insurance overall. Over the past years, and there have been lots of transactions in the insurance market. Fintechs have been a very active sector, especially for the digital banks, payments, institutions, and also distribution platforms. That we're seeing a lot of activity, investment distribution platforms. Real estate is really hot at the moment. I think we never experienced such a low interest rates as we have now in Brazil, with 2% basic interest rates. So Brazil is starting to experience what most of the countries have been experiencing for many years. That's really low interest rate environment, and this is great for the real estate sector. So we know, for instance, that there are more than 10 real estate companies preparing for IPOs in Brazil, and we're seeing good opportunities mainly in the low income real estate segment. The asset management segment has been very, very active. As I mentioned before, the distribution platforms had new players, a lot of disruption in the recent past, and we're seeing now a lot of activity on the asset servicing segment. I think it's the last frontier in asset management that has not had the big disruption in the country, and we're seeing a lot of interesting activities and some few good opportunities as well. In the E&R sector, we're seeing a lot of activity in energy, specifically transmission and renewable, mainly, solar, wind, all of that. Water treatment will probably be one of the most hot segments in the near future. Brazil requires, there was a study made by KPMG that it will be necessarily approximately $150 billion or 750 billion reais of investments in the water treatment segment in the next few years, and most of this segment is controlled by government entities at this point. But there is a new legislation, so expect a lot of privatization transactions and investments in this sector. On the transport, we think there are many opportunities in distressed concessions Some concessions are being renewed, taken back by the government, and will be sold again. So we believe there are many opportunities there. Agriculture is a very, very strong sector in Brazil. Brazil has a good advantage in terms of temperature, soil, water. There are big opportunities in Brazil, not only in the agriculture itself, but also, in all the surroundings like logistics, seeds. We're seeing a lot of good opportunities there. Healthcare is a very, very active sector, has been active for many years now. The P funds are investing heavily. It's still a sector that it's very fragmented with a lot of good opportunities. Technology is always a very, very hot sector in Brazil, always the sector with most of the transactions. But the past 2 or 3 years, we've seen a huge increase in venture capital investments in Brazil, both local funds, but also flying investors from the U.S. In technology companies. One interesting sector that we are seeing movement in more recent years is sports overall. Soccer specifically, we're seeing some movement to professionalization in the soccer world and some interesting investment opportunities there. Telecommunications is really hot overall. Education, we had a huge wave of investments from P firms and foreign investors in universities. And nowadays, we're seeing more activity in the fundamental schools, high schools, EAD as well, like tele education. And some other sectors. There will be a lot of there seems to be a lot of interesting opportunities in distressed automotive, retail, industrial sectors. Consumer goods is a very hot sector because Brazil has a big population and usually a target sector for investors. And also we have some interesting opportunities in aerospace and defense. Brazil has the third largest global companies in this sector and the ecosystem around it. So we are also seeing a lot of good opportunities there. So, I think in our view, the environment for M&A is better than the headlines. In different segments, in all of those segments, our team is working on mandates, deals, opportunities, and we are available here to help our clients that want to investigate further and the opportunities in those sectors. So, Ericson, that's a very brief overview, but I'll be available here for questions or to join in the discussion.
Well, thank you, Marco. Thank you very much, you guys. I mean, this is a webcast focused on tax. Marco is giving us a brief overview. Of course, further questions, just let us know. So, if you allow me, of course, if we follow a deal cycle, one of the first steps, at least from a tax perspective, is the due diligence. So, I will ask Marcus. It's not the same Marco. The other one is Marco. Now it's Marcus Oliveira, one of very experienced tax partner, M&A tax partner. Marcus, can you walk us through briefly, of course, the main, let's say, concerns that a foreign investor usually have when it comes, or should have, when it comes to due diligence in Brazil, please?
Yeah, sure. Thank you, Ericson, and thank you all for attending this webinar. So, as mentioned, my focus will be primarily on DD insights, the tax environment in Brazil, and also some relevant issues that are typically identified in a Brazilian M&A. So, in terms of insights, it's useful to say that the statute of limitation in Brazil is 5 years. The concept of tax clearance does not exist here, and at any point in time, tax authorities can audit the last 5 years. From a succession risk perspective, an asset deal or a shared deal are basically the same, although the goodwill can only be generated through a shared deal. That's one of the reasons that this is the most common type of structure adopted in deals in Brazil. It's highly recommended to not only focus on corporate income taxes when doing a DD in Brazil, given that indirect taxes and labor social security charges are also relevant. And potential risks in those areas usually involve sizable numbers. And this is the scope that you typically adopt in cross-border transactions, covering corporate income taxes, indirect taxes, and labor social security charges as well. It's also important to mention that both quality of information and internal controls have improved recently due to the adoption of the IFRS and also new electronic tax filings and regulations. Although it's important to say this, in family and small to medium business, accounting books are still mainly prepared just to comply with tax rules, sometimes badly, and typically don't provide a view of the business performance. That's why a proper DD in this particular section is pretty important in Brazil. So jumping to the tax environment, if you could please, to the next page. As you probably heard of, Brazil has a highly complex tax system. We have several layers of taxation, federal, state, and municipal, each one with its own regulations that sometimes even interfere with each other. Tax returns are filed in electronic format, so inspections by the tax authorities can be done remotely just by the reconciliation of these various electronic files, not only within the company, but also with the clients and suppliers' returns. So all those numbers are reconciled. We don't have the tax consolidation concept in Brazil, meaning that each company has to file its own tax returns, calculate and collect its own taxes. It's not possible to transfer tax losses or tax credits from one legal entity to another, even if they are within the same economic group. In capitalization rules, there is a limit to push down that in Brazil. Our transfer pricing rules are not based on OECD. In this case, it's not possible to negotiate specific methods and profit margins with the tax authorities. Companies are required to follow one of the pre-established methods. Litigation initiated by taxpayers are extremely common in Brazil, given that agreements between companies and tax authorities are in general not possible. And the litigation is then the only alternative in case a tax assessment is issued during a tax inspection. It is, although important to say, this a real time-consuming process, given that it may take from 15 to 20 years, depending on the case, to reach a final decision. We have several tax incentives and benefits available at all levels, federal, state, and municipal. But the trick part here is that in several cases, those incentives can be the only competitive advantage of the business. So if the company loses the benefit for any reason, the profitability can be heavily reduced. And this is an area that we usually put a lot of effort during the DD process. Cfc rules, profits from subsidiaries abroad are taxed in Brazil on an annual basis. And we have a highly complex indirect tax system. Each state has its own VT regulations, and the incorrect procedures in any of the various indirect taxes can and normally do have a very significant impact on profitability and EBITDA, in addition, of course, to relevant potential liabilities. Last but not least, the relevant issues that we typically identify in a Brazilian M&A, the succession liability. This is actually the very reason why a tax and labor DD is done in Brazil. I would say that it's almost impossible, not to say impossible, to eliminate the succession liability risk. Although, of course, there are several structures that can be adopted to reduce it. Informal procedures, although with the implementation of electronic tax system, procedures such as off-book sales, black sales, registration of dumb expenses, and out of the payroll payments have reduced, but are still present, mainly in family-owned business. And all those issues have a significant impact in the DD process. Independent contractors, hiring FTEs as contractors to reduce payroll costs is very common, although buyers, on the other hand, may want to discontinue these schemes, depending on the case, of course, which certainly affects profitability, given that in Brazil, changing a contractor to a regular employee represents relevant increase in costs. I would say something around 60 to 70% additional costs. Questionable tax planning, sometimes by splitting a legal entity in several smaller entities with the same operation, same shareholders, same address sometimes, just to adopt a tax scheme that reduces the tax burden. It's still very common in small business. Poor quality of information. Sometimes you come across entities with lack of proper management controls and reconciliation between accounting books, tax returns. Sometimes in some cases, every piece of information has a different number. So it's really a time-consuming process to reconcile all those different information. Mixing of shareholders and legal entities transactions, personal expenses recorded and deducted by the legal entity, and also personal assets recorded in the books in order to reduce the taxable income. Related party transactions done exclusively for purposes of tax avoidance or reduced tax burden. Transfer pricing risks in multinational companies, of course. Although the TP legislation has been in place for several years, we still come across companies that have not implemented TP studies in order to observe whether the prices adopting operations with related parties comply with the legislation or not. And last, the labor risks. Historically, Brazilian labor law has been totally partial to employees, which results in a really high number of labor claims. Although this has been reduced with a labor reform recently implemented. Ericson, that's basically it about the DD. Of course, I'll be here during the presentation to take questions. And now I guess we'll jump to the to invest in Brazil, right?
Yeah, thank you. Thank you, Marcus. I think it's a key component of the deal cycle, the due diligence. But before we move on, I have a question to my friend Gordon. Gordon, given your position, many years of experience cross-border transactions, M&A transactions, as far as the DD, as far as the due diligence is concerned, how do you see what the main concerns can be for a U.S. investor or a multinational investor doing business in Brazil for this particular project?
Well, certainly from a U.S. perspective, in addition to everything that's just been mentioned, obviously, local jurisdiction and due diligence is key. Ever since the tax reform in the U.S. since 2017, we have a totally new regime, which means that in general, you're going to be taxed on a current basis on income being earned by the Brazilian entity if you're a U.S. investor. And to know what those taxes are, you need to know what your U.S. tax attributes are of the target. And in many cases, if the target hasn't been subject to U.S. tax before, hasn't had a U.S. owner previously, you'll have no idea what those are. So it requires one of two things. Either if you're doing an asset deal, obviously it's easy enough, but if you're doing a stock deal, either, assuming you can, and it's subject to certain rules, making an election under U.S. tax law to treat the acquisition as if you acquired the assets, which is helpful in that it resets all your attributes from a U.S. perspective, so it gives you a fresh start. And in a lot of cases, you'll make that election just because it's too difficult to spend the time to otherwise figure out what the U.S. tax attributes are, but not always. In a number of cases, if you've got pre-existing earnings from a U.S. perspective, they can be very valuable because, in general, you can redistribute those earnings without any tax in the United States. you may have a higher basis on inside than the price you're paying for the outside stock. There's a number of reasons why you might not want to make the election. But the one key thing I'll mention in all this, and you're going to hear me say this over and over again, is after tax reform, modeling. Without modeling, you don't have a clue as to whether or not doing an asset deal or a deemed asset deal is better than not doing an asset deal. And the modeling can become incredibly complicated, including because we have a incredibly complicated foreign tax credit system, which we'll talk a little bit more later, which is how you get credit in the U.S. for taxes, for example, paid in Brazil. And by the way, 600 more pages of regulations came down yesterday on that topic. So we're awash in regulations here in the U.S. It's incredibly complicated, but there's no substitute for modeling.
Thank you, Gordon. Sorry, I like the modeling. You know, it's a fair and wise advice. You know. So thank you very much, Gordon, and thank you, Marcus, as well for the insights as far as the due diligence. Now, again, following the deal cycle, the other step is to think about the investment structure, right? How to step into the country, into Brazil in this particular case. So I'd like to invite my colleague Carlos to comment on the main, let's say, topics or issues that our foreign investors should bear in mind when investing in Brazil, when doing business in Brazil. Carlos, can you please comment on this?
Sure. Thanks, Ericson. So first of all, as you said, if we follow the typical deal cycle when it comes to making an initial investment in any country, not only in Brazil, maybe the first issue that any foreign investor should be mindful of is to try to ensure that its investment have treaty protection. And on this matter, I must say that Brazil has a relatively limited treaty network, especially if you compare to other European holding jurisdictions where sometimes they have 90, 100 double tax treaties. Brazil has only 34. Also, one feature of the Brazilian tax environment is that there is a lack of double tax treaties with some relevant commercial partners like Germany, UK, and US. We used to have a treaty with Germany that was denounced by the German government some years ago. And actually, there is no really prospect of having a treaty with the US in the short or medium term because there are a number of issues in the Brazilian treaty negotiation policy that the U.S. Treasury government is really against you, such as Brazil typically requires to have tax-sparing provisions in its treaties, and the U.S. government is really against it. So there is really no perspective of having a treaty with the U.S. in the short and medium term. But the good news is that, the treaty network in Brazil is expanding. There are some new treaties being negotiated and being actually pending approval in the Congress with Singapore, Switzerland, UAE. So there is a trend that, some treaties would be added to that network in the near future. Also, on the flip side, we also have to say one thing that although it's a bit counterintuitive, investing via treaty jurisdiction in Brazil does not necessarily result in immediate tax advantages. And this is because Brazil exempts dividends from withholding income taxes under its domestic laws for many, many years, more than 25 years now. So there's no need to have treaty protection for this particular item of income. And when it comes to royalty and interest, generally the treaties also, they do not provide for lower withholding income tax rates as compared to the domestic one, with just a few exceptions, So in any case, it's always advisable for you to consider investing through a treaty jurisdiction to have treaty protection in case anything changes in domestic law. And as we're going to be discussing later on, there is a potential tax reform in Brazil. So it could be the case that, the treaty can result in an actual preferred treaty rate as compared to the domestic one if the tax reform in Brazil turns out to be implemented. But as of now, I think the message is that there is no really, let's say, what most investors would expect to see a benefit by investing in a treaty. This is rather limited in Brazil as of today. I think one other comment just to share with you our treaty policy. The Brazilian treaties, they do not follow the OECD model convention on certain topics, being maybe the best example when it comes to royalties. So Brazil always negotiates to have taxing right over royalties as a source country, so that Brazil can impose its withholding income tax on outbound royalty payments, which is differently from the model convention. So the only exception would be the treaty with Japan that basically follows the OECD model convention on this respect. And also, as I mentioned before, in Brazil, most of the treaties concluded with developed countries, they do provide tax-sparing credits, which for certain financing structures can be an interesting advantage that can be relied upon if you are using a treaty country to invest in Brazil or to lend money to Brazil. So maybe moving on to investment structures. As Ericson said, I think I will just make a brief comment here that we are talking about investment structures for corporates, so what we call foreign direct investments, because we will have another webcast where we'll be discussing specific structures and specific investment vehicles for private equities and sovereign wealth funds that they do rely quite often in different vehicles such as the FIP, the real estate investment funds. So those would be discussed in a separate webcast. So typically, when we are talking about corporates or foreign direct investments, as Marcos said, in Brazil we don't come across very often with asset deals. Most transactions are really share deals, and that has to do with the succession risk that Marcos mentioned. But one other feature that is very common in the Brazilian M&A environment is that most transactions, they are actually implemented by using a local acquisition vehicle, as opposed to investing from abroad. And there are basically two main reasons for that. One is the tax deductibility of the goodwill, and the second one is to push acquisition debt into Brazil. So very briefly, when it comes to the goodwill or the premium, basically Brazilian legislation provides that whenever you have a shared deal in Brazil, a business combination, the premium paid on the acquisition might be turned into an amortizable asset. So basically, you have to prepare and to allocate the purchase price through a purchase price allocation report. When you first allocate the fair value of the assets to tangibles and intangibles, and any residual amount will be allocated as goodwill. And if we go to the next slide, we try to show that you have to have a merger as the triggering event. And when you do the merger between the acquiring vehicle and the target, you trigger the tax amortization of both the fair value of the assets and the goodwill. And this has been widely used. It can be in certain cases a very relevant amount, because basically you are getting a tax deduction of a significant portion of your purchase price. So in many transactions, we might be talking about a very relevant figure. But I think here one important message is that although such a benefit is provided in the law, and as I said, it has been widely used, we have many companies and many clients that did take advantage of this. This is indeed a hot topic, a topic that is really under the spotlight of Brazilian tax authorities. So again, it's in the law. It is a legal, let's say, tax benefit that companies may rely upon, but there is a lot of litigation around this matter. And of course, each case has its own merits, own specifics, and in order to make an assessment, you need to take into account the facts and circumstances of each case. But I think it's important to everyone to know, especially those who are not so familiar with the Brazilian tax environment, that this is something that involves some level of risk, especially if the transaction is not properly structured. So what we've been discussing with some clients is really find different ways to tackle or to address this issue. And for certain clients, maybe the decision might be to try to postpone the tax claim of the deduction. For others, is maybe to initiate a judicial proceeding to make a court deposit in a judicial escrow account so that you can discuss these in courts. And if you get a favorable outcome, at the end of the day, you can claim the deposit back. So there are a number of ideas and strategies to deal with that, which needs to be considered, of course, on a case-by-case basis. So I think this is something to keep in mind, because, as I said, it's been widely used and it can involve a significant amount. but the key message here is that a very detailed risk assessment needs to be done. So maybe moving on to the second reason why we do have a local acquisition vehicle in Brazil. As I said before, it has to do with pushing down acquisition debt. And there is basically, the main reason for that is that Brazil is still a country with a relatively high corporate income tax rate. If you think about this, let's say, race to the bottom that we saw over the years across the globe, with many countries lowering their corporate income tax rate, in many places, Brazil still is in the group of countries with a high corporate income tax rate, is 34. We'll be discussing later on today about the tax reform. Camila will be talking about this. So there could be a change in the corporate income tax rate in Brazil in the near future, but it's been a high rate for quite a while. And of course, if you think about this movement of countries lowering their corporate income tax rate, there is this incentive to fund Brazil with that so that you can leverage from this arbitrage between having the service of the debt being deducted in a high tax country and the interest income being picked up in a country with a lower corporate income tax rate. So it's also quite common. And also the second reason would be that in Brazil we do not have, let's say, specific rules that prevents you from claiming a tax deduction of acquisition debt. You know, we always flag this potential risk that, you know, when you merge the companies, you know, tax authorities could potentially claim that you are deducting a debt that was related to the acquisition of the own shares of the company, but we don't have a track record and we don't have specific rules denying that kind of deduction. Of course, you need to be mindful of Brazilian TP rules and FinCap rules and also IOF, which is a financial tax trigger on the execution of foreign exchange transactions. But I tend to believe that's not, based on our experience, a major issue when it comes to transfer pricing rules. Our rules, as you know, it's quite different from OECD's, but because when it comes to interest on intercompany loans, the arm's length rate in Brazil is based on the interest rates of the Brazilian federal government bonds in the international market. Typically, there is enough room to charge a reasonable interest rate to Brazil. When it comes to FinCap rules, our rules are quite simple if you compare to those earnings stripping rules that you see in Europe, for example. In Brazil, basically, you need to ensure that a debt is not greater than 2 times the net equity of the Brazilian company. And with regards to this tax IOF, if you manage to send the money in Brazil with an intercompany loan that has an average maturity that is greater than 6 months, the IOF rate is 0 upon the inflow of a loan. So typically, most of our clients would never send money in Brazil as a short-term loan. Rather, it will be always what we regard as a long-term loan. There is the issue, of course, of offsetting, of merging the companies. As Marcus said, in Brazil, we don't have the tax consolidation concept. So in order to be able to offset, you know, the acquisition debt at the level of the acquisition vehicle with the target, you need to have this merger. But apart from that, it's a strategy that is commonly used by foreign investors here in Brazil. So maybe moving on to the next slide, there is a very short comparison between debt and equity. And I think here we cover most of the issues here. I think one important comment is about interest on that equity. Julio will be commenting about this later on as a repatriation strategy in Brazil. But for the sake of funding, I think it's important to keep in mind that interest on that equity is a sort of a hybrid instrument that, at least it's not hybrid from a Brazilian standpoint, it's a deductible item. But in many countries, they used to be viewed as a dividend payment, which allowed a deduction in Brazil and a no inclusion at the level of the recipient. But the point here is that by putting the equity in Brazil, you actually boost your ability to pay more interest on that equity. So I think the final message here is somewhat similar to what Gordon said about the US, that, you know, modeling is really key in Brazil to determine the best or the most efficient investment structure and also the funding, because you should not only take into account transfer pricing rules, FinCap rules, and IOF, and the forecast of profits of the target. But you also have to keep in mind that you could have alternatives to repatriate and to remunerate shareholder as interest on an equity, and you also have the potential of the goodwill. So there are a number of different variables that you need to put into this equation. So our key message here is that, again, modeling, it does make a lot of difference when it comes to deciding the ideal mix of debt and equity that you should put into Brazil. So that's very summary what we have in terms of investment structure. So back to you, Ericson.
Thank you, Carlos. Thank you very much. And I totally agree with the modeling. It's very relevant for sure. And as Carlos mentioned, in the other webcast, we are going to cover other structures that are more, let's say, related to private equities and sovereign wealth funds and asset managers. Right now, following the deal cycle, of course, after the investment, investors have to think about value creation, right? Value creation in tax, how to maximize and optimize the tax footprint here in Brazil, and also repatriation strategies, right? So my goal here is to ask my colleague Julio to walk us through value creation and how do we see value creation as far as tax is concerned, and also cash repatriation. Julio, please.
Thank you, Ericson, and good afternoon for our participants, maybe good morning for some of them. I think that there is no doubt that value creation is very relevant in any type of investment. But as Ericson said, we'd like to focus our discussion here in tax value creation or value creation in tax. So I think that's the one of the important things that we'd like to share with you. The second thing is that, as we've been discussing, the value creation in tax could be spread all over the life cycle of the investment. So it's not only it's important to see that from a deal structure, as Carlos was explaining to us, so we can see a lot of value creation there in terms of using goodwill, debt push down. So we need to take a look at how to step in, as Carlos explained, how we create value during the period of the investment, and also how to create value on the repatriation or maybe in exit strategies. So this is something that would be spread all over the life cycle of the investment. And in fact, I borrowed this slide from our portfolio investors presentation that will be held in October 14th, as Ericson and Carlos mentioned already. And I didn't change this on purpose because I think that value creation is not only important for portfolio investors, but also for strategic investors. So if we remove the fund structure, if we replace portfolio companies for target companies, and we add the repatriation strategies, we can have a tax value creation also for strategic investors. So that's really important. So Eric, we can move forward to the next slide. In this slide, I think this shows the three pillars that we see in terms of generating or creating value in tax. So the first one that I would like to emphasize is tax upsides and opportunities. It's very common that some strategic investors buy companies in Brazil, large groups in Brazil. So one of the key issues to create value is through corporate and tax reorganization, where we can find value on using the tax losses, because as Marcus said in the beginning of the presentation, the tax consolidation concept does not exist in Brazil. So it's really important to, if you buy a large group, maybe you have some ways to combine companies in a most tax efficient way. So using losses, reducing direct taxation on intra-group transactions, implement cost-sharing agreements. So we can see a lot of value on this type of structures. And not only when we buy a large, on a strategic investor buy a large group, but also when the strategic investor buy different companies in different moments. So at certain point in time, the group in Brazil is too big because the strategic investor bought a lot of different companies in different times, and then we can merge and combine these different entities into another set in order to be more tax efficient. Another area that you can see a lot of value is when it comes to tax credits, because the Brazilian legislation usually leaves room for different interpretations. So it's not uncommon to see great opportunity in tax credits, not only because of the different interpretation, but sometimes because of lack of control. So this is another way to create value on the target companies. Supply chain analysis. So there are many other opportunities that we can explore. I think the second pillar that we'd like to focus here is the tax risk management, because as we said, the due diligence and the acquisition is just the beginning of a long journey, and it's probably that we face with a lot of different tax risks identified in the due diligence. And our question is how to manage that and how to solve them. Should we change the procedure? If we change the procedure, how we expose the past? What are the clauses that we put in the SPA to protect ourselves? Maybe evaluate legal measures to avoid or to mitigate some tax assessment from the tax authority. So how to deal after the acquisition with the risks that were identified during the due diligence phase. This, I think, is another second pillar that's very important on creating value in tax. And the last one, but not the less important, is the tax compliance, because in Brazil, we have a lot of different returns. They are prepared on electronic format. They are available online to the tax authority. So, in fact, if you have a good tax compliance, it's already a good tax planning to have a good tax compliance. So a focus on the tax compliance is really important. But not only that, what we've been seeing more recently is a moving towards tax transformation, which is a thing that's around the world, and it's really important also in Brazil. So in order to create value, another key element should be considered, like what is the quality of the team of the target that you already acquired? Does this team meet the requirements and the standard of the acquirer? This is one big question. What is the size of the tax team in Brazil? Is this too big? Maybe is this too small that we may face lack of control and lack of compliance? So these are another type of elements that is very relevant in terms of value creation. And the most important one, I would say, is technology. How is the resources, the technological resources in the target level that could be enough or sufficient to be in compliance with all these online obligations that we have in Brazil. And we need to keep in mind that the Brazilian tax authorities were one of the early adopters in terms of technology in tax. So, Ericson, if you can move to the next slide, please. And then move to the repatriation. So we talked about value creation in the acquisition. We talked about the value creation during the period, and now we have to take a look at the repatriation strategy. I would like to focus on dividends and interest on net equity. We have the other common ones like interest payments and share capital reduction, but dividends, as Carlos said, is not subject to taxation in Brazil, which is a very important feature in Brazilian legislation. And we have the interest on net equity, which is usually calculated based on a long-term rate over the net equity of the company. and we can get a deduction of 34 against a withholding income tax of 15%, brings a 19% tax benefit in Brazil. But obviously, it's important to see what would be the taxation at the home country, at the strategic investor country. I think that's my comments, Ericson, for this piece of the presentation.
Thank you, Julio. Thank you very much. I actually have a question to Gordon as well. Gordon, take into account, Carlos and Julio's comments about cash or repatriation strategies that you can use in Brazil, dividends, interest on that equity, of course, shareholders loan. From a U.S. perspective, in terms of a U.S. investor, for instance, interest on that equity, is there any advantage for them to use one way or the other as the avenue to repatriate cash out of Brazil to the U.S.? Take into account also the reform that you guys went through a couple of years ago.
Sure. Yeah, I'm going to give you an answer that I'm sure is going to shock you based on my previous comments, which is absent modeling, there is just no way to know. You may look at it and say, okay, interest on net equity, that's great. I'm getting a 19% benefit in Brazil, but if the answer is you're getting a worse result in the U.S. when you take into account our foreign tax credit position, your foreign tax credit position and the rules with respect to anti-hybridity, which would pick up the interest on net equity, so it'd basically be fully taxable in the U.S. You wouldn't get tax credit, but also the timing rules of when distributions out of the company would in fact be treated as being from that income and therefore be subject to adverse U.S. tax results. You just can't know. The same thing with respect to interest. In general, paying interest gives you a reduction in Brazilian taxes. You get a tax credit for you get a withholding tax, you get credit in the United States, and so overall it may be that gives you the lowest tax rate. On the other hand, even if you have a high Brazilian tax rate, if you have a distribution from Brazil or an inclusion in the United States, even with the high tax rate, if you're in the right basket and you have other income you can shelter with the credit, you may be better off merely having the inclusion. And all of it is just modeling. And also what makes it difficult is projecting out where you're going to be a few years from them, even without changes in tax law, which we may get to later, to run the model and see which one you think is going to be the best result. And the last piece I'd say in all this is to try and maintain flexibility as much as possible to make changes in your structure as we, at least in the U.S., have an ever-evolving world. It's not just the U.S. If you take a look at what's happened over the last 5 years across the world in terms of tax reform, I think optionality is pretty key and a key factor to keep in mind as you're looking at any sort of repatriation strategy, because what's good today may not be good 3 years from now.
Yeah, that's good, Gordon. Thank you very much. Going back to Julio. Julio, I think after cash repatriation, repatriation strategies, value creation, of course, eventually the U.S. or the foreign investor may decide to sell the Brazilian company, exit step. So can you walk us through, the tax implications as a result of a decision towards exit, selling the Brazilian business?
Sure. I think we, as the rest of the world, we have the main routes to use as an exit strategies, like primary transactions, where the proceeds of the transactions goes directly to the company, diluting the current shareholder. I would not expect a big tax impact on this, maybe an IOF on the equity injection. We have the secondary transactions where there is a capital gain and the procedures goes direct to the seller effectively. So there's a capital gain, and capital gain for a non-resident in Brazil is taxed in Brazil in a bracket of 15 to 22.5%. It's important to mention that even in transactions between two non-residents, as long as the asset is located in Brazil, there will be taxation in Brazil. We have the IPOs as another strategy, and this we have to be careful because we have some bureaucracy in terms of registering the investments in Brazil, and when we have to manage the conversion between direct investment to a portfolio investment, this could trigger taxation on this conversion, although there is no disposal of the asset at this moment, because usually this conversion is required to be carried out based on fair market value. And one thing that is specific in Brazil that is slightly different from the rest of Latin countries, let's say, is that we do not have a specific provision for indirect sale. Although there is no specific provision, we see a few cases challenge this type of structure, an indirect sale of an asset located in Brazil, if under certain circumstances, the only asset that is being sold is in Brazil, and the structure was put in place in an artificial way just to avoid the taxation of the capital gain. So I think that would be my remarks in terms of the exit strategy and the insights and the points of attention that strategic investors should consider.
Thank you, Julio. Thank you very much. So if you guys recall, Marcus talked a little bit about the due diligence. We had inputs from Gordon. Carlos talked about the initial investment structure. Julio walked us through value creation, cash repatriation, and exit. So this is pretty the deal cycle, but there is one key component that we should discuss as well, and I will ask Camila to jump in here. This topic refers to what may happen, let's say, in the near future when it comes to potential tax reforms and what kind of transformation we could see in the next couple of years in Brazil in terms of tax reform, what has been discussed in Brazil. Before Camila talks about this, I'd like to ask, yes, let's move on with Camila. So if Camila can move on and walk us through the potential changes that may occur in Brazil, in the Brazilian tax landscape, that would be great. Camila, please.
Of course, certainly we can, Ericson. Thank you. And I would like to thank our attendees today. I'm very glad to be here. I think we can jump to the next slide to get started. So tax reform is the talk of the town here in Brazil, or to say the talk of the country. We have different bills at Congress. Some were proposed by federal government, some by congressmen, or even civil associations or entity class associations. But we'll focus today on the federal government proposals. It is supposed to be divided in 4 main steps. The first step is the fees and co-fees conversion into CBS, and that's the only step that has actually been proposed to Congress so far. Second step would be the excise tax, the IPI, changes in its feature of selectiveness and regulatory aspects. Step 3, and we've touched a little bit on this today, income tax. Individuals, change in the progressive amounts for taxation and deductions, and for corporations, taxation of dividends. Carlos and Julio mentioned a bit on how dividend exemption is a key feature here for investments in Brazil. That is potentially going to change in the near future, and also a reduction of the overall corporate income tax rate, which is currently at 34. The last step would be a reduction in the payroll taxation, which would be subsidized by a new tax over financial or digital transactions, which is very similar to something we had in the past, the CPMF. There is very little clarity on what is going to take place on steps 2, 3, and 4. The government has not sent these bills to Congress yet, so we'll discuss in further details only step 1, which is in the next slide. Step 1, CBS, which is the contribution on goods and services. The proposal is to convert fees and co-fees, which have different rates and rely on gross revenues. They have different rates and different regimes, and they would be converted into a single tax, which would be CBS. The reason why the federal government wants to convert fees and co-fees in a single tax is to technically reduce overall tax burden and reduce litigation. Fees and co-fees are one of the main areas of litigation in Brazil. Marcus touched a little bit on how taxpayers litigation is a key feature here in Brazil. So fees and co-fees is a major player in that sense. Regarding inputs, So which inputs would generate PIS and COFINS credits, and would other VAT be part of the calculation basis for PIS and COFINS, mainly the state VAT, ICMS, and the municipal service tax, ISS. So CBS would levy at a general rate of 12% over the sales of goods, services, the imports of goods and services, also royalty payments, and transactions with intangible assets. These last two are different from what the current PIS and COFINS calculation basis is. With very few exceptions, so as financial institutions, oil and gas, and tobacco, all taxpayers would be subject to the same rules, the same regime, and the same rate. By allowing a tax credit over the overall amount of CBSs on invoices related to goods, services, or imports of goods and services, the government expects to reduce the intensive litigation regarding PIS and COFINS inputs. The new CBS would also impose taxation on digital transactions that currently are out of the scope of PIS and COFINS taxation. The digital platforms here in Brazil would be responsible for collecting CBS. So the proposal is, the government states that it will not increase taxation, but that's not always true. Some sectors would be directly affected by CBS. That's the services, real estate, construction, and infrastructure. So also royalty payments CBS would levy over royalty payments, over digital transactions. That is also a difference that may impact transactions here in Brazil. So as in any tax reform, there will be winners and losers to this new tax. Moving on. What else can we expect for the tax reform? Thank you, Ericson. So what else we have coming up, hopefully in the next month or next year? The presentation of the remainder of the governmental bill for the tax reform, so steps 2, 3, and 4. We do not have any visibility on when this is expected to occur, especially because this is an election year in Brazil. Brazil suffered a lot through the COVID crisis, so the plans for tax reforms in 2020 were certainly delayed by these factors. There is some talk regarding only presenting the tax reform bills after municipal elections, which are supposed to occur in late November, which would lead to the postponement of new taxation only for 2022 for certain taxes. There are other bills in Congress addressing indirect taxation, that PAC 45 and PAC 110. They encompass different taxes, and that also includes state and municipal taxes, so we will have to see how they play along with CBS. And there is also a proposal for digital economic taxation for digital service providers. Rates would be from 1 to 5% on gross revenues accrued here in Brazil.
Thank you, Camila. Thank you very much. So it's, as you guys can see, this is a lot of discussions, but they are very focused on indirect taxes, not much on income tax. But again, going back to Gordon, I'd like to hear, Gordon, from you. You know, you guys, KPMG, US, went through tax reform a couple of years ago. I'm sure that this was a easy process. As far as the M&A landscape, I mean, how do you see, you know, what kind of input can you give us as far as a tax reform, M&A, and cross-border transactions, you know?
Sure. Yes, at the end of 2017, we went through major tax reform. The most major reform was not just reduction of the U.S. tax rate from 35% to 21%, but changes in the cross-border taxation. Basically went to a system in which almost all income of a foreign company is included in income currently, with some minor exceptions, but subject to a reduced rate of tax, basically at 10.5% rather than 21%, and subject to complicated foreign tax credits. Also put in significantly revised thin cap rules, what we refer to as earnings stripping, and also minimum tax with respect to taking into account certain deductible payments to related parties. And we spent the last 3 years trying to figure out what it all means and how to work with it from a planning perspective. There have been literally thousands of pages of regulations issued to date on it. And some of the regulations, including most recent regulations, actually came up with some surprising results, including the election in certain circumstances to exclude from current inclusion in U.S. income that's been subject to a high tax rate in the foreign jurisdiction when calculated under U.S. tax principles, basically 18.9% or higher. And so that as regards Brazil, if you have income that's taxed at a high rate, that may be an election that you could think about making. It's subject to a lot of rules and, as always, modeling. But equally importantly, the dust hasn't even settled on tax reform from 2000. And as you may know right now, we're in the process of going through a presidential election, which will happen on November 3rd. There was a debate last night, or some would call it a schoolyard brawl. I'll let others who saw the debate decide on that. But one thing that was reiterated during that debate is Joe Biden and his tax proposal that if he were elected, that he would increase the corporate rate from 21% to 28%. And that would have significant considerations for ongoing planning, including where it's more efficient to put the leverage, how you do acquisitions, basis step up versus non-basis step up, the value of net operating losses. In addition, I mentioned earlier that foreign income can be subject to a preferential U.S. tax rate of 10.5%. He would double that to 21%. He would also put in a worldwide minimum tax, basically by looking to financial statements and say, I believe it's 15% that you can't have overall tax less than 15% of your financial income. The knock-on effects would be dramatic, and for planning would basically turn a lot of what's been done in the last few years on its head, only because we would now be at a circumstance where the U.S. tax rate has gotten high enough that a lot of what was done before tax reform in terms of trying to minimize the U.S. tax base would come back into play. And even it's interesting to me, when you look at the proposals in Brazil, we seem to be going in opposite directions. You'd be reducing your tax rates and we'd be increasing our tax rates. But all of it will, remains to be seen. Stay tuned after November 3rd and see what happens. First of all, Joe Biden would have to be elected president. Second of all, as a practical matter, the Democrats would have to get control of the Senate, or none of this is likely to happen. But if both of those events happen, which is a possibility, it's going to be a very interesting next few years. Yeah,
interesting times, right?
Thank you, Gordon. May you live in interesting times. Isn't that the curse of the blessing?
Thank you, Gordon. Going back to Camila. Camila, I think another potential source of change in Brazil is, the potential idea that Brazil could join OECD. Can you walk us through, please, this topic?
Thank you, Ericson. So Brazil filed a request to join the OECD and still expecting a reply on that sense. Major differences have been identified in this procedure, and the key aspects are, first and foremost, transfer pricing rules. Brazil has a very unique transfer pricing legislation. Marcus touched on that earlier. So Brazil adopts fixed margins and not the general arm's length principle. On September 15 this year, a fortnight ago, Brazil officials at the OECD published yet another report on this aspect, stating that Brazil's intention is to make some changes to the transfer pricing legislation, but not in full compliance with the OECD guidelines, but general adherence to principles. Another key aspect is treaty practice. Carlos also mentioned this a bit, how royalties are taxed under treaties as services. Services are classified as royalties, and there is withholding income tax over such payments. Brazil taxations of service fees, and that goes back to the general tax reform we just talked about. We need to simplify our VAT taxation here in Brazil, and also changes on permanent establishment rules. The OECD feels that our legislation is too broad and does not provide specific adherence protocols for the profit allocation here in Brazil. Yet, Brazil is not a member of the OECD, but has adopted some BAP project initiatives here. They're mostly related to exchange of information and tax transparency. And I think it's all on, maybe we can jump to the next slide. Thank you. But the main changes that we did in relation to the BACS project are the country-by-country reporting, the exchange of information and consultation procedures, ultimate beneficiary disclosure rules. We have adopted in our internal legislation FATCA protocols. We have an IGA Model 1. We have been exchanging information with the U.S. since September 2015. And we also have implemented CRS here in Brazil and have been exchanging information with that regard since September 2017. Brazil has not signed the MLI. It has proceeded to adjusting its treaties bilaterally, which is also an alternative in the BAPS project. So I think the key aspects to bear in mind when investing in Brazil regarding these changes is the relevance of modeling and planning, which we have been talking about exhaustively over this call, and also the level of information that the tax authorities will have access from now on, and with whom this information will be exchanged in the future, how to take these lemons and make lemonade. And I think that's it on my side. Back to you, Ericson.
Thank you, Camila. Thank you very much. So we actually have our Q&A session as usual. We don't have time to cover all the questions. We have one question that refers to FX here. FX, how to manage FX risks in Brazil because of the swings in the FX rates. How to manage this, because the question refers to, imagine a huge FX loss that could affect the earnings and profits, and therefore the ability of the Brazilian subsidiary to pay out dividends, for instance. Well, as far as FX, usually going very straightforward. Companies in Brazil usually they elect, from a tax perspective, to consider FX losses and gains based on cash basis. And therefore, you will avoid, from a tax perspective, this whole fluctuation of the FX rates. As far as accounting side, unfortunately, the only way is to come up with some sort of hedge strategy, because if you do have a huge FX loss, these will impact your accounting profit, your distributable profits, and therefore your ability to pay out dividends. So by electing the cash basis, you kind of resolve the issues from a tax perspective, but you still remain with the dividend issue, right? That's one question I took the liberty to answer. The other question that we have here, and I'd like to pose this question to my colleague Carlos. Carlos, you made reference to the goodwill, as you said very well. Goodwill, usually buyers, they try as much as possible, of course, to make use of the goodwill and the asset step up. It's something that has been used, as you said very well, by many multinationals, private equities, Brazilian companies. But can you elaborate a little bit further, just a little bit because of our time limit here, but if it's a risk strategy, what can we do to pursue the tax amortization of the goodwill and the asset step up, please?
Sure. So very briefly, our technical view is that if we are talking about a transaction between unrelated parties, and there is the actual payment of a purchase price, and there is a PPA supporting the goodwill, the taxpayer, the investor, does have the grounds to claim the amortization of the goodwill. And this is somewhat being some precedents, or also because what the Brazilian law changed a while ago was really to avoid transactions between internal groups, so transactions between the same economic group and transactions that involve the exchange of shares and not an actual payment of a purchase price. So if we comply with these features of, again, transaction with an unrelated party with a payment of purchase price supported by a PPA, we do believe that there are grounds to move on and to claim the goodwill amortization. But maybe when we are talking about foreign investors, maybe the only weakness or the only room where tax authorities they've been trying to attack or challenge those structures have to do with the role of the acquisition vehicle in the whole acquisition process. So in many occasions, tax authorities try to build a case and claim that the acquisition vehicle was set up just right before the transaction was closed, and there was no substance at all. The acquisition vehicle did not actively participate in the acquisition process. So of course, this is an important factor that any foreign investor should be mindful of. So if you are planning to invest in Brazil, maybe you should plan in advance and set up an acquisition vehicle as early as possible in the process, making sure that you have personnel, infrastructure, that you document everything properly to make sure that you avoid or mitigate the risk of tax authorities claiming that the acquisition vehicle had neither substance or business purpose. So I think that would be the main recommendation. So again, as long as you can start the process as early as possible, the better. And in proper planning, it's always recommendable to be done in case like that.
Thank you, Carlos. Thank you very much. The last question, of course, we have others here, but in the interest of time, we don't have actually time to cover all the questions. I'm sorry. One last question refers to the possibility that, Brazil may join OECD. We have this huge BEPS, movement throughout the planet. And that's a question to Julio. Julio, how do you see the future of interest on net equity, which is a way for companies in Brazil to repatriate profits, cash, to investors? How do you see the future of interest on net equity within this overall context of BEPS and Brazil potentially joining OECD?
Thank you, Ericson. I think that when BEPS come out, I think the interest on net equity was really under attack, because from a BEPS perspective, when it comes to hybrid instruments, they tend to say if this is a deductible payment in a country, this should be a taxable revenue in the investor or in the receiver. So this makes the life of interest on net equity a little bit difficult. But I think we still may have room to use the interest on net equity if we structure the structure properly, because some countries would still allow to combine the deduction in Brazil, and maybe even if it's taxable in the other country, some kind of sparing credit, like the Netherlands, for instance. Although we faced some challenges more recently in the Netherlands too, but I think we still have room to overlap some challenges and still play with the interest on net equity. And again, we're still under attack in Brazil because of the tax reform. Maybe they want to try to exchange that. But anyway, you have to see the next chapters and stay tuned.
Thank you. Thank you, Julio. Thank you very much. We are coming to the close of this session. Thank you very much, everyone. Those whose questions we were unable to answer, we are going to reply to you directly via email. We have a feedback survey, which should pop on your screen shortly. If you please could answer the survey, that would be great for us. And the slides will be made available within the next 48 hours. So again, I'd like to thank our speakers, very great team, and I'd like to thank you guys to participate in this webcast. And again, I encourage everyone to participate and also to watch our next webcast, which will take place on October 14th, and we will be very focused on private equities, sovereign wealth funds, asset managers. So thank you again. Have a nice day, and again, thank you very much.